I'm Kristen Classi-Zummo, Apparel Advisor at Circana, and I want to talk to you about why apparel's growth may look strong, but it requires a deeper look. If you glance at the headlines, retail was up in Q1. Growth is happening, and we're seeing it in apparel. But when you dig into the data, the story changes. Growth isn't being driven by demand, it's being driven by price. Looking at our point of sale data from actual retailer feeds, prices were up 5% in Q1. And consumers, they're offsetting those higher prices by buying less. Units are down. There's a selectivity at play here, and brands and retailers can't ignore what's happening. Shoppers aren't just browsing. They're filling their carts with intentional items. They're being selective, ruthlessly intentional about what they purchase, scrutinizing every item against essentials like rent, groceries, and gas. Apparel may have dropped a bit in their priority hierarchy, and they're only pulling the trigger on those pieces that truly deliver value or meet a specific need. So, as a brand or retailer, you might think, well, price is deflating demand, lowering price will boost it, right? Well, that's not necessarily true either. Consumers are splurging in certain areas. Premium sweats and denim, attainable luxury categories that might carry a higher price point and are performing well because consumers value the brand name or quality within these categories. They're willing to pay more for pieces that feel purposeful and versatile. But here's the catch. They counter that splurge by trading down in other areas in their wardrobes. We're also seeing this play out at the channel level. Off-price, mass, wholesale clubs, they all gained share in Q1. Why? Because consumers see immense value in these retailers. It's not just about the lowest price. It's about how good of a product you can get at a savings. They want quality at a discount, not cheap products. So what does this mean for your business? First, understand that dollar growth does not equal healthy demand. If your growth is price-driven, you're operating in a contracting market where volume may be a challenge going forward. Second, consumers are rebalancing their spend. They'll pay for quality brands in categories that deem worthy, but they'll trade down elsewhere. You need to know where your assortment and your brand falls within that hierarchy. And third, value is the currency right now. That does not mean cheap. It means delivering a product that justifies the price, whether that's through quality, versatility, or brand equity. Winning in this environment means understanding where consumers are willing to spend and where they're pulling back, and positioning your assortment accordingly. At Circana, we track point of sale data across channels and categories to give you the full picture, not just the headlines. If you want to understand where the opportunities are and how to navigate this landscape, visit circana.com to learn more. And if you found this helpful or interesting, please subscribe to our YouTube channel for more insights on the trends shaping apparel and retail.